Okay, well, again, we're moving on, and we're afternoon here in Turkey, and I think we're still good morning in UK. Just an interesting point on numbers who are watching this and listening to this, both in Turkey and the UK. We've got over 2,000 people watching and listening. So we better be all on our best behaviour and make sure that we do it all right. This is the next panel, and it's future projects and investment in the rail sector in Turkey. And again, a very experienced panel. Sait Bey will moderate, and I'll leave him to introduce this panel, and they can give you their background. And we're looking forward to a very interesting and educational discussion. Thank you, Sait Bey.
Thank you, Chris. Welcome everyone again, and thank you so much, Mo, for investing your time with us today. So let me introduce briefly myself. I'm Sait Ayrılmaz of Chief Attorney Partnership, and I'm delighted to be moderating this panel where, as Chris mentioned, we are going to discuss opportunities and challenges and railway sector in Turkey. I'm very happy to be joined by our esteemed panelists today. Please welcome our speakers. Aslı Erden Öztürk, Associate Director, Senior Banker from EBRD, Günay Gökçen, Development Director, Turkey from Medium, and Ahmet Can Yakar, Project Finance Managing Director from ICBC Yatırım. I will start my question because in the first panel there were some touches on the railway sector, and it's a quite hot topic in general under the infrastructure sector in Turkey. As you know, Turkey aims to reach a railway network with a total length of approximately 17,000 kilometers by 2023, marking the centennial of the Republic. So also, from your perspective, what government incentives and support mechanisms should be offered to promote railway investments in the Turkish market? Which roles could private developers play in further expansion of the rail network in Turkey?
Hello, everyone. First of all, I would like to express my gratitude for inviting me for this panel, and hearing that 2,000 people also watching and listening us is an extra pressure, but I'm really glad that the audience is there. So let me start with a bit of a quick statistics and the background before answering your question. At the moment, Turkey has around 12.5 thousand kilometer conventional line. Around 10% of it is like in the high speed. And the Republic of Turkey government also announced its 2023 vision statement, right? And we know that they would like to even make it higher than 17,000 site. They would like to double it to 25,000 kilometers and also doubling the high-speed railway line. This is their vision. They made it clear. So the will of the government is there on the railway sector. And coming back to the needs, it's expected around all this infrastructure needs is also combined with their vision of a holistic combination of the railways, ports, logistics centers. So it is not just making a lot of railway investment. They also would like to combine holistically with the rest of the transport modules, which is important and which is actually crucial. Okay, so you don't just need a railway line, you want it to be connected to the port for an uninterrupted journey of your, either the passenger or the freight. So that's important. So the will is uninterrupted, green, safe, increasing of the transport modules of the railway sector in Turkey. And it is expected around 40 billion investment. So it's a huge investment need. It is there, the need is there. So one particular point, in addition to Turkey, I would like to stress, maybe most of the audience in the UK also followed it closely. G7 met last week in the UK, and one of the statements coming out of this G7 meeting is that they also would suggest, the railway investment in most of the countries as much as possible, because green is the focus. We want our environment, our planet, to make as much green and sustainable as possible, because we all know we don't want to create carbon emissions, because unfortunately the universe cannot sustain it anymore. So we have to take actions now. So that's why railway is hot topic. I'm glad to see that the Turkish government is already taking steps on this one. They made their statements very clear what they wanted to do. So coming back to what the private developers can do, developers, companies, etc., they can come to a sector if it is really well structured. If it is structured in a way legally, in a competitive way, I am sure there are lots of operators, construction companies, they are ready to enter to the sector. Some of them, they have their even offices, even if they don't do immediate stuff in Turkey. But the first step, especially in this very state-dominated sector, is expected to come from the sector in a way, putting the working environment in a way that makes it very investment friendly. The will is there, and a little bit of a background, maybe related with the liberalization, because I cannot answer your question without touching the liberalization process, because all is needed in the railway sector. As I mentioned, 40 billion investments as its own, it's not easy to all financed by the government, right? Government has its, finite resources. So we need private parties in this sector, either through the construction companies, operators, financiers, banks, etc. So the will to take it from the state to private is there, it is coming, and it is also supported at the moment by the legal legislation. More needs to be done, but I would like to stress also that starting from beginning of 20s, the government started to work on the liberalization of the railway sector. They passed the first law in 2013 to make the sector liberal. And the two aims of this law is to make the state-dominant railway authority and to de-link between the construction and the operation side, which they did in their perspective, and also to create competition. The more competition we will have in this sector, the more investment will come. And for investors to come and for financiers to finance, people really will need to be convinced, first of all, that there is a fair competition in the market, right? I'm talking about the operation side. On the construction side, let me maybe divide. Let's start with the construction side. On the construction side, some of the investments will clearly be done by the government, that's for sure. But going forward, if we all know that there is a huge investment need, there needs to be more private investment in the sector, and the government is aware about it. So first, I think certain actions needs to be taken by the government so that people will start thinking more private financing of the sector. It could be in the form of a PPP, for example, in the rail, which was not implemented in Turkey, but these are all options on the construction sector and on the construction side. And on the operation side, I would like to also touch base that the more operators are confident that there is a fair competition on the market, they will come more. The more they will come, more logistics centers will be built, more railway operations will take in place. At the moment, there are only 2 private operators, and they mostly carry their own goods, right? So basically, you would like to promote the operators to carry the third parties' goods as well, not their own company goods. And maybe I talk too much now, Said, but just to combine, I think I just needed to give the background. But just to combine, it starts with the government will, which we see it is there. Railway sector is not an easy sector because it has been state-dominated for a long time, and a transformation in the sector takes time. That is normal. It is not easily transferable, but the will and the kick-starting of the legal transformation is there. There is a bit of a more to be done, definitely, to continue to liberalization sector. But the more government puts this perspective in place, I am confident more private parties started to come, and I'm sure most of the construction companies, operators are closely following. Maybe the reason why they are hesitant to immediately come is because maybe they are watching the finalization of the liberalization, process, because it's a process. You can't expect to happen immediately in 6 months' time. It's already started, and I think it looks like from the announcement of the government, looks like it will continue.
Thank you very much, Aslı. Thank you very much. I mean, it's all very insightful and actually complementary to my second question. So my second question is to Günay Hanım. I mean, as Aslı mentioned, I mean, large-scale infrastructure projects, I mean, involve significant capital costs, in particular in the context of railway projects, where the network is being expanded or when a substantial portion of the network needs to be modernized. Consequently, I mean, in the absence of government subsidies, the cost of large-scale infrastructure investments may often exceed the appetite of the equity or debt investors. As Aslı mentioned, so apparently there's a $40 billion need for an investment in Turkey in the railway sector. So in this context, various models are being considered to offer viable project development methods that entail different risk share mechanism. In your view, which structures could be deployed to address the inherent risk in the infrastructure sector, and what lessons from the Turkey's network transportation PPP has been learned can be applied to the other sectors as well?
Thank you very much, Sait Bey. Actually, I would like to thank you to be invited to this panel, and I think it's very exciting to have the audience around the 2,000 people. That's what I would like to first of all mention. In terms of the railway and the structure, maybe it might be important to mention so far the achievement of the Turkey actually on the completed series of mega projects that centered on the connectivity, such as Marmara Project, Ereğli Tunnel, Yavuz Sultan Selim Çanakkale, and social infrastructure project, and some other road projects are going on that has been tendered last year and now looking for the finance and in the process as well. It is important to mention that Turkey's rail sector was indeed in a form of reform. The Ministry of Transport was not exercising the regulatory supervisory role in the beginning, and Turkish State Railways, a monopoly responsible for a train operation, infrastructure, and maintenance, was inefficient and reliant on the state funding. As I am sure it's well known now that there have been some changes on the law to support actually the funding of the TSDD, Turkish State Railways, which is until 2023, which can be extended by 10 years as well. So 16,000 and having the 40 million euro target for the Turkish Railways project, it's really exciting. However, and we know that it's going to be boosting the economy. However, as infrastructure project, it's in nature mostly large projects, large-scale project, where the financial aspects are crucial beside the technical aspects. That will need to involvement of the support of the government, particularly those in emerging markets. Given the fact that in developed, high-rated countries that such a large projects will need a subsidy of the government, I think it is important that that needs to be taken as a best practice, and before the tendering any railway project, the economy of the project, affordability of the project, sustainability of the project, feasibility of the project, those are all needs to be considered before tendering and bringing the private investor into the position. What I would in terms of having a large scale and contribution without from the government subsidy, there could be another contingency liabilities that might be bringing up. It's just structurally. It's the indemnity against the payments, insurance, hedging, cost overrun, guarantees, debt of exchange rates. All those are all to be considered actually while developing the project. While it is meant to be bringing the private sector, private investor into the place, and also the way that it's structured, I think the risk allocation will need to be identified clearly. In terms of the position of the operator, position of the rolling stock provider, position of the private construction company, special purpose vehicles approach, and life cycle cost all needs to be taken into consideration in order bringing the private sector into the market. And as I said, big, large scale projects, it is not easy always in other countries as well to finance. So we have to clearly well structure, and we have some work to do on our, I think, from the government side as well.
Thank you very much, Günay Hanım. I mean, just moving on the financing side, as you mentioned. So, Ahmetcan, how do you assess the opportunities for cooperation with local and foreign lenders and IFIs, maybe on further expansion of the network, also considering the increasing interest of IFIs and Asian banks for the region, and in particular for Turkish transportation projects? And the second link is how could Turkey leverage its strategic location and significant know-how in infrastructure sector to scale up its railway network expansion strategy while taking an ever-increasing role in global initiatives such as, infamous Chinese One Belt and Road initiative?
So, dear esteemed panelists and the audience, thank you for this time. As the ICBC point of view, let me break down the two notions, since the two valuable panelists actually mentioned some of my points, so I don't want to repeat themselves. So the thing is, firstly, when we assess the opportunities for cooperation with local and foreign lenders, let me actually tell the atmosphere what we have seen so far, because as ICBC, especially to the three high-speed railway tenders that have been made and which hopefully will be financially closed by the end of this year, 3 of them. From this point of perspective, I can say that we have a snapshot on our hand, which is ECA-centric, which is actually good. So we see some of the very valuable ECAs who are willing to finance these deals with a great chunk of it. And I'm also agreeing to Aslı in this regard, because ESG is the hot topic of the nations these days, especially of this unfortunate pandemic. Therefore, we will be seeing climate laws enacting in EU, in other countries. 2030 is flag year for both EU and also for China, as you have also maybe seen in March 2021. President Mr. Xi Jinping has announced the 14th development plan of China, and there green finance and green energy is one of the most underlying issues. So in this regard, we see ECAs, and apart from that, of course, ICBC also providing its commercial lending capabilities to the deals. But we cannot really see local banks, or we see few of them, and I think the reason for that is because of the funding costs of the local banks are being exposed to these days. So in order to overcome this and make it as an opportunity, so as you say, the CDSs, and in correlation, of course, investment grade of Turkey has to have positive developments in order for us to see more local banks to this local development deals, transactions. But apart from that, what as ICBC do thanks to our network, we see that Russian and GCC banks do have appetite also to participate these kind of deals. So I think one of the most factors for this is Treasury being the direct borrower. There is no other layer, a guarantee mechanism, which you need to wait or like resolve things, dispute things in order to, approach the government. So I think this has also been appetizer. So this was actually a good opportunity. That's why I think we see a lot of ECAs and international lender groups in the deals. So when I move on to your second question about the geostrategical location, so as you know, as Turkish people, we always been taught, even in the elementary school, that Turkey has a very important geostrategical location. So we grew up like this, especially I think we are in the same age with you, so we do grow up like this. So when we put this aside, in recent years, as you also mentioned, Turkey is aiming to expand its geographical scope of its railways also. And I think, if I'm not mistaken, Turkey has spent so far around $21 billion between 2003 to 2020 for these investments. Of course, I'm not only talking about high-speed railways, also improvements. And when we move forward, we see that as it's bordered by the Black Sea, Turkey, to the north, and the Mediterranean to the south, Turkey is actually, it is a strategic crossroads connecting the Balkans to the Middle East, Central Asia, to the Caucasus and Black Sea countries and Mediterranean neighbors. So importantly, in line with its geographical location between continents and regions, Turkey supports development of regional transportation projects, and I think we are aiming not only commercially, but economic and investment relations, but also political and cultural relations between and beyond surrounding nations. So if the middle corridor is used effectively, important economic opportunities will arise also, but I think things also need to settle down in that specified countries. And I think Central Asian countries can benefit from this trade, China, Europe as well, and estimated to be worth around $600 billion annually. So in particular, establishment of logistics centers, free trade zones at the ports of Turkmenistan, Kazakhstan, Azerbaijan will, I think, facilitate the development and deepening of Trans-Caspian cooperation. So additionally, as a Chinese financial institution, ICBC is also closely chasing the opportunities, and the Middle Corridor Initiative envisaging the revival of ancient Silk Road, which is creating a natural synergy with the Belt and Road Initiative of People's Republic of China, which aims to develop connectivity between East and West. And as ICBC, as I mentioned, we are now in the 3 high-speed railway projects in Turkey. So we will also seek for other opportunities in future for on the basis of Kunming principle by introducing Chinese EPC contractors also. Thank you.
Thank you very much, Ahmetcan. Thank you very much. It's quite insightful. I mean, moving back to Aslı, you mentioned about the liberalization process, which is a quite significant step taken by the government and supported by the various IFIs. So going forward, where do you think can the financing come from, and what could be the best strategies for private investors to secure cross-border funding for their railway projects in Turkey?
Thank you, Said. Just to give the little bit of a background again to answer your question. I think it's at the end of 2017, Turkish State Railways separated itself and then make a construction side, TCDD, and TCDD Transport as the operating company. But of course, this is only the one important step. For us, for EBRD, which is an IFI, who tries to promote the private investors, we have been also talking a lot with private parties in this sector to understand how they see this competition, because legally transforming the state-dominated entity is the first and the biggest thing, and the second thing is, of course, to open it up to competition so that you see the investors coming in. So with the second one, for example, we see that the government authorities on the railway sector first announced that they will stop getting subsidies by the end of 2018. Then it was extended to 2020, and now it's extended to 2023 with an option of 10-year extension. So this is an important element. This is a government decision and government call, but this is an important element. Depending on how it evolves, how the government really opines on this one and takes action, we will either see more private companies coming in, or if no action, we will see this coming in at a bit of a later stage. So if private companies continue come in, and if again, it depends on the government. People only come if there is a level playing field in the sector. If not, they will just wait until it is there, and then they will start to come in. Securing the financing, coming back to your question, IFIs like us, especially, for example, I can talk on behalf of my institution, EBRD, we would like to promote private investment in the railway sector. Our mandate is really not financing the government, but financing the private parties, making the competition as much as possible, which we think will help both parties. I just would like to give an example, because I have also ICBC colleague here. Together with ICBC, actually, we financed at the end of 2019 the railway railport deal. Unfortunately, because of COVID, it couldn't start construction. Hopefully it will, but again, this is due to the COVID. This is the inland railway terminal. And because the sponsors of the deal are really seeing this railway investment as a strategic investment for the mid to long term, and together with EBRD and ICBC, we supported this deal. We would like to do more examples like that. And I think the more private operators and the companies, it could be on the construction side as well, like Meridiam and the other funds, not just operators, the more they feel comfortable about themselves, the more they come in, but they will only come in if there is a right structure. They will not come in if there is no right structure, if they don't think the competition is well established. So at the moment, it is in the crawling stage. The important steps have been taken so far. It will need a bit more, as I mentioned. But if there is a good project there, I think IFIs like us with a mandate of promoting private parties will take it seriously, especially when the railway sector is important in the transport because it's green. It doesn't, it doesn't like, unfortunately, we also do motorways, but compared to motorways and airports, etc., we are also doing them as well. But railway sector has a big plus. They are not creating carbon emissions. And it's all over the world, not just in Turkey now. It is the focus. We have to make sure our projects are all green, less, creating less emissions. And giving this high-level mandate of everyone and EBRD's mandate of promoting private parties, as long as the government is putting the right steps and people are coming comfortable to the projects in Turkey, I think from the financing side, IFIs will take it quite seriously. I can talk about on behalf of course, only my organization, but we would like to promote as much private investment in the railway sector. But again, it will depend on the sponsors. Sponsors, in conjunction with the government, the project will come into the market first, and then they will knock our doors and say, hey, you will be looking at it. Would you like to finance it? We started to do it back in 2019, as I said, with the first private inland railway deal. Hopefully it will come live and we will promote it. But again, we would like to finance more of these projects. We couldn't see much nowadays. We are hopeful that with the actions government will take, more to come, and we would like to look more and spend our time more on this one.
Thank you. Thank you.
Said Bey, could I just come in there? I mean, listening,
sure,
with great interest to your discussion. And I mean, the comment, that just been made by Asada, and I mean, when you look at what investors will be putting on their checklist, if you like, going forward, and sustainability is definitely high on the agenda, as is compliance. And compliance is not just about one company; it's about the whole supply chain. And if you look at the G7, and the discussions they were having about climate change and the environment, I mean, that's moving up the agenda very, very quickly. And when it comes to investors, I mean, ethical, compliant, green investment is going to be a major opportunity. And it's up to governments to make sure that they're providing the right policies in order to sustain that. And I mean, you're much better qualified than me, but when I talk to investors and some of my government colleagues, I mean, it's very clear that companies and investors that sort of embrace global sustainability goals going forward will have more value than organisations that take their time about it. And this is something that both the UK and the Turkish government have to clearly understand if they're going to attract the sort of investment that they need for these big infrastructure projects. And it's probably a discussion for another session, but I think it's important to get that on the table, because it is becoming a more important issue, and if you get left behind there, then you're not going to attract the investors. And it's something that is definitely something they have to consider.
Yeah.
Thank you. Sorry to
no problem at all. Actually, it's a quite right spot, Chris. I mean, the question that I'm going to ask to Günay is in relation to the sustainability. I mean, and the points I considered, how the world is developing. So it's a great intervention, to be honest. So I mean, as both Ahmet and Aslı mentioned, I mean, while the cost of the investments in the railway sector is admittedly on the higher end, the railway also stands out as a more kind of environmental friendly and cost-effective sector. So Günay, in your view, what could contribute to the development of a safe, sustainable, low-carbon and expedient passenger and freight transport network in Turkey?
Actually, there are a lot to say about this. That's just clearly, it may not be ended with this session, but I will just try to summarize it. It is obvious that efficient rail transport can be important catalyst for the economy and the growth and development of the country, and generally more energy efficient than road and air transport. And can bring an opportunity for investment, operating efficiency, and modern clean technology to the country. However, especially for Turkey, I think the main area that we need to develop is taking into consideration the carbon and climate change aspects globally. It is not only local requirement that needs to be followed by the government as well as the private sector. That implementation could be done through the feasibility report, affordability, value for money, low carbon approach. Those are all needs to be considered when you develop the project. Otherwise, it is something that needs to be developed after the tender, which is currently in Turkey, because of the local requirements are limited. Aslı knows this very well. So as a private sector, private investor, we have to develop this. The work that has been done by the government at the later stage, which is time consuming and money consuming and source consuming, actually. Especially value for money and affordability issues, and as well as the impact on the environment should be assessed carefully with all the aspects, because in Turkey mostly it's just related to economic affordability, but that is not the things that we only should look at it. It's just to give you some background on Paris Agreement, that we have not rectified it in Turkey. We know that nowadays COVID might be the impact on the green financing and everything, the aspect low carbon, climate change friendly project and everything. But we know that Turkey needs to adapt some climate change action plan in accordance some global approach. So then we can contribute to the project considering the low carbon, expedited passenger and freight transport network properly, and our work will be easier than I think it will be easier. That's how I can just summarize it.
Thank you, Günay Hanım. I think it was quite important for all of us to hear the background with respect to the ECG and how you, as an investor, as a foreign investor who plays a vital role in the world's infrastructure project, sees it. So it was very helpful. So just, moving back to Ahmetcan, and again, in relation to the financing, I mean, Aslı mentioned that, both institutions, I mean, very reputable institution, which played a key role in all Turkish infrastructure projects come to financing of the railport project. So as a key player in the Turkish financing market who often works with multinational investors, EBRD or else, from your perspective, what steps could project developers and sponsors in Turkey to secure cross-border financing and tap more liquidity for their railway projects? And what would be the key criteria for foreign banks when making commercial loans available to investors in the Turkish rail sector?
Thank you, Sait, for your question. I'll keep it short. The thing is actually, when I look at this question from the perspective of the high-speed railways, there is no investor. The investor is the government. So I can only speak on behalf of the EPC contractor point of view, which is not my thing. So the thing is, I think what I can agree from some of the key statements that the other good panelists have made is that privatization can be tested in Turkey for the railways in order for us to really understand the investors' point of view for this, because currently they just come, do the construction, get the EPC profit, and just leave the table. So from this point of view, if we want to attract more EPC contractors, if that would be your question, I would say just make it more international standards and just care about the environment and society, and then we will have more people and of course more yields. So this would be my answer. When I move on, I can say that in Turkey, I think we need to make a development plan, a master plan, which we have actually, I know, or revise that plan in order to really know what's going to be the next move in railway sector. Will it be high-speed railway? Will it be intercity lines? Because what we see here today is just individual. By individual, I mean like municipalities. By individual, I mean like the Directorate of State Railways in some parts, trying to rebuild or re-innovate or make new lines among the cities, which is really definitely a good one, because like when you look at EU and on annual basis, these are by the way 2019 data, I can also share the source if you would like, 460 billion passengers used per kilometer. In China this is 1.5 billion, and in Turkey it's only 14 billion. So we got a very good way to go. And about privatization, can it be the next step? It can be, because let's take it as a learning stage, and now we can move to level 2. So this would be from our point of view as China, who is being one of the widest railway in the world and who is increasing more and more with the invention of high-speed railway institution in 2008. Currently, the high-speed rail line only in China is 37.9 thousand kilometers. So it's quite good amount of number when we look at Turkey, 1,000 something. So this would be my key thoughts. And for key criteria which you have kindly asked, sorry, I think maturity for the banks would be good, how to say, criteria, like to go or not to go criteria, because we are doing something like, as to the EBRD colleague has mentioned, like crawling stage something. So if it's shorter maturity and shorter average maturities, then banks can have more appetite. And of course, environmental and social impact is important. And what we can do for future site under environmental and social umbrella, and because this item ESG is something that we will speak more and more, I think, in coming future. So I think Turkey should have international fairs about railway, and we should encourage to have a railway free zone if we really want to be a part of this middle corridor, or a industry zone where there is railway equipment can be produced, and also a faculty should be, or on several universities should be opened, maybe to have foreign desks from EU, from China, from states, from Russia. So to develop and to have a plan, not for today, but for 5 years, to have for 10 years. That's how we can really talk about a sustainable financing, sustainable investor flow, sustainable FDI, and sustainable export growth. So I would conclude my sentences, of course, by saying, as ICBC, we have participated in motorway deals and now participating into railway deals. So we are fully supporting infrastructure. And of course, we would introduce more Chinese investors to have more synergies, but with or without Chinese investors, as a Turkish establishment of ICBC Group, we will persuade both entities, both sides, investors and financial institutions to make investments in Turkey for a better and a greener Turkey. Thank you.
Well, thank you very much, Ahmet Can, and thank you very much for the other panelists. I mean, I ask all of my questions to our respective panelists. I don't know, Chris, I think you are preparing to ask some questions to us, but please go ahead.
Yeah, just one or two. But anyway, I mean, I have to give a plug for UK Export Finance also. I mean, UKEF, you know, are very active in Turkey, in the region, in terms of infrastructure projects. You know, a number of projects, transactions have already been completed. I know they're working with also with EBRD. You know, railways are obviously a great opportunity. And you know, I would say to anybody listening today, I mean, if you want to know more about what UKEF are doing here, please contact us by email and we'll put you in touch with the right people. But I think the main point that most of the panelists, you know, are coming back to is that, you know, things are going to take time. I mean, nothing's going to happen overnight. And you know, Turkey is a long-term commitment. It's, you know, it's something that, you know, you've got to invest in early, so you don't miss the opportunity, but you've got to prepare to go the course. And you know, given, you know, the big infrastructure projects, you know, that's the model that you need in order to sustain through that process. And you know, the benefits will come. I mean, we're all convinced of that, because, you know, the nature of the country, you know, it needs investment, and, you know, it needs infrastructure, and you know, it all has to be done at you know, over a period of time. So yeah, I think anybody listening, you know, that's the first thing they have to take on board, is that you know, they have to look at Turkey as a long-term commitment, and if you're prepared to do that, then the rewards will be there. So, you know, that's just my final summing up on that. But thank you, Saeed.
Thank you.